Good.
Okay,
Thanks.
everything is recording now. Good stuff.
Good.
Okay, well, welcome
Good.
everybody to this session. Today we are going to talk about the Pipnotic software, um, and I'm going to tell you a little bit about myself and my motivation for writing the software, which focuses on some pretty specific things. And then we're going to jump into the software, the functionality, and how we can use it. Um, uh, the theory behind supply and demand we're going to save for another webinar because I have other presentations for that. I think it'll make more sense to perhaps look at the theory behind that after you've been introduced to the indicator. Then you'll definitely understand why it is that the software does what it does. So we'll do that. Okay. Well, my name is Sarit Harper. English guy living in Denmark. I met a Danish girl quite a long time ago, so I moved to Denmark, migrated here. And my background is in IT security, and so I figured at a pretty young age I better try and get a job before I get thrown in jail. and so that's what I did. I started doing IT security, and who needs security more than anybody? Well, it's the banks, and so I spend probably the most part of the past 15 years sitting in banks doing security audits for some of the biggest and most exciting banks in the world. And this is typically of trading platforms, and a lot of the software we tested was related to their core business, so fixed protocol API stuff, hedging, and FX trading platforms that their institutional traders use. And so, I mean, 15 years is an awful lot of time to chit-chat with traders, and so I'd ask them, once I got to know them, I mean, how do you guys trade? And I didn't know anything about currency trading back then, so they'd say, well, I mean, I trade currencies, or I trade options or futures or whatever. But this currency thing seemed pretty interesting to me, and so I started to ask them a lot of questions and ask them to kind of tell me how they were trading. And once I understood a little bit about currency trading due to a bit of reading on the internet, then I'd ask them what things they would focus on, and they would say that supply and demand is really important, and also the health of an economy. And I thought, the health of an economy, what do you mean? And they say, well, the strength of a currency. So you can have an economy, and the representation of the health of an economy is the strength of its currency. And typically, you will see, I mean, currency is going to be traded with other currencies, and so there's a relative strength. So one currency can be strong, the other one can be weak, and so the strong currency is going to attract buyers, and there's going to be too much supply of the weak currency, and people are going to be liquidating their assets in that currency, and so that pair will move higher. And so I kind of understood that pretty clearly, and so I said, okay, good. I want to learn a little bit more about this currency trading. It sounds pretty exciting, and so I went to work and started writing the software. And I started doing this, I don't know, maybe 6-7 years ago. In 2010, I started Pipnotic and started writing this software. And supply and demand is by far, I mean, I don't know the experience of you guys, but if you search on the internet, forex trading system, I mean, you will get.
Sorry, been there, done that, blown accounts, you name it.
That's
tried it all. No, it doesn't work. They know it doesn't work.
Excellent, cool. So then you're pretty aware of the fact that, I mean, there's a lot of crap out there, and a lot of them say you're going to put this indicator on this chart, and when this does that, then do this, and it's in my opinion, it's difficult. I mean, someone can definitely make it work if they're managing their trades properly. I think they can probably make it work, but for me, it didn't seem to work. And so I wanted to understand price, which is the most important thing. I mean, if you look at this chart here, for example, this is showing us orders that have been filled. So you can see that we have a demand for the American dollar in relation to the Canadian dollar. So this is being bought. So the dollar is stronger than the Canadian dollar, and you can see that price is drifting higher. And so, I mean, putting an indicator on the chart doesn't really make sense because it's taking your attention away from the important bit, and it's focusing on something else, whatever that may be. I deleted all the indicators on my platform, so I don't have any to show you, but you're not focusing on what you should be focusing on, and you should be focusing on this stuff here, in my opinion. And so, I mean, my software goes in, it analyzes a lot of data, and it draws these little rectangles. And these rectangles, depending on where they are depending on where they're located in relation to current price, will either be demand if they're below and supply if they're above. And supply and demand trading is it's absolutely unbelievable. I'll just say it like that. It is, if there ever was a holy grail in trading, I believe
Yeah.
that supply and demand is it. It
Yep.
is
Yep.
unbelievable, absolutely unbelievable. Why? Because it is, once you understand the function of liquidity in the currency markets, accumulation, the balance, the constant battle between supply and demand, and what that picture looks like on a price chart, then you're done. You're completely done. You will never have to work ever again, because you can simply go into the market and just pull profits out at will. It will become that easy once you understand it. And my belief is that that anyone can learn how to do it, as long as you put in a bit of screen time and you have perhaps a nice environment, a supportive environment, and some really good tools that focus on what it is that you need to focus on, which is supply and demand. So, okay, so I mean the indicator. I mean, you guys have had the opportunity to play around with it a bit, which is great. It draws all these rectangles here, and each rectangle has a color, and these colors correspond to the different time frame.
Okay. Siri left. So it's not us. Yeah, the volume. So okay, so it's not me. It's his volume. Probably his. We'll try to get him back on, guys. It's the probably the internet connection or something.
Okay, can you guys hear me now? Excellent. Sorry
Yes.
about that.
Yep. We're good,
So I
Siri. We're good.
got my foot caught on the cable under the table and pulled the internet out.
Ah.
You got to clean up that spaghetti down there. Okay, so back to the matter at hand. So we have these colors down here, and these correspond simply to the colors here. So when I'm on this price chart and I see a blue triangle, sorry, a rectangle, then I know that it's from the 4-hour chart. These white ones are the hourly, and the red one that you can see down here, this is a daily area. Good. So that's that. And you'll also notice that we have this blue rectangle here, and inside it there's a white one. What does that mean? Well, that means that I'm on the 4-hour chart, but within this 4-hour area of demand, we have a nested 1-hour area, which is really, really cool, because if you look at this, I mean, price went down, we accumulated here for one period, and then price went up very quickly. And so all you can see really in this accumulation candle is that there's a very big wick. And what does that tell you? Well, that tells you almost always that you should go to a smaller time frame and have a look and see what's going on down there. And the indicator is doing this for you on the fly, so you don't have to. And so you can actually stay on one time frame if you wish, and you can perform your analysis without having to click through all of these time frames all the time. And so now I know, looking at this, that we have a really nice area here to buy. We have a parent. Actually, it's a child here. We have the parent over here, but we have a really nice area of demand here. Price came down. We accumulated for one period. What does that mean? That means that there was a very short period of agreement in supply and demand, which is really good, which is what we want to see. Price came down. We filled some orders down at this pocket of liquidity here, just above this area of demand, and then price went up, and we have not been back since. So typically, you could think that, okay, we want to buy here around this area here at the top of the box. So we would put our entry at the top of the box, and we would be our stop would go just below. But if you want to have a smaller risk, then you just simply take the 1 hour area, which is nested within inside. Then you get a much tighter pip risk, which enables you to trade a larger volume, which is great. So the market's just closed for me, so I have to refresh everything manually here. And so that's what it looks like. And so on the bigger time frames, for example, you can see, let's find another chart. The Aussie's a nice one. You can see that there's a lot going on here. You think like, oh, good Lord, there's so much going on here. What do I do? Which one do I pick? Well, you have to pick the one that's closest to price. But before you do anything else, you have to ask yourself a question, a really important question, and that is, what is driving price? So whenever you look at a price chart like this, you have to ask yourself, what's driving price? And what does that mean? Well, that means that you have to look at the longer-term supply and demand, and you have to notice on what time frames supply and demand from these larger period time frames price is reacting at. And you can see that we have this orange box up here, which is a weekly area of supply. This has been tested a few times, and it was tested in the last time, and this is actually what is currently driving price. We have weekly supply that is driving price. Does that mean something to us? It does. It means that we should be perhaps a little bit cautious about buying, because we have enormous volume of sell orders located in this orange box here, and we've thinned some of them out. But you could see when price moved into this box pretty deeply, we had an enormous rejection here. And then price went up, we had another go, and then we had another go, and then price is managing to move lower. And we have an area of demand down here, you can see, like so. And this area of demand is almost gone. You can see that price went through it. It went pretty close to the bottom of the bar. And so once price manages to move through it, then you have to ask yourself the question, okay, what area of supply took out this demand? And then you can look a little bit higher, and you can say, well, we have a 4-hour area of supply up here. And then you ask yourself the question, is this a parent, is this a child? Or this is a child, the parent is the one just here. And so you move this box up here. And this may sound a little bit weird. I'm going to go over all of this in minute detail when we do the presentation on supply and demand. Good. And so you would mark this one off, and this would be the logical area to sell at. And then you look inside this box, and we have a blue box, so we have a smaller entry, and this enables us to sell at a much smaller pip risk. Michael is asking here, do you tend to put orders in the wick? Yes, if we go back to that, I don't remember which pair it was. Or just take any pair. So if you have a look at this one here, for example, you can see here at the top we have some wicks. So we have tiny wicks here, we have bigger wicks here, and I'll absolutely put orders in the wicks. You can see this one here, this 4-hour area of supply was on the chart when this bar closed. So it could have been traded once and twice, and you can see the order goes pretty high up into the wick, but it's not like a random place in the wick. It's at 4-hour supply within this pretty interesting area of a daily supply here. You can see how price went up. We accumulated for 2 periods and we went down. We didn't do any damage, but we managed to gap away. You see how price established this area of accumulation, then it gapped lower. And so this tells us that there's likely some people selling up here. This is not a beautiful example. It's just a way to illustrate the fact that we have the daily area of supply, then we have the nested area just above. Stephen is asking, how do you tell how much notional trading at a given area? Well, it's difficult to tell. What I like to do is focus on the areas that are fresh and untainted. So if you consider this tiny one here, you can see when this was established, there's black space from the point that it was established into current price. So this has not been tested. So there's been no trading in this area of supply up here yet. But when price comes in and starts to poke into it like that, I mean, this is simply consuming the liquidity that is available up at this area here, thinning it out, making it less probable on the following approaches. So would I trade this on the next approach? I would, but I'll manage it a little bit carefully because price has already been back to this level quite a lot in the past. So ideally you want to look higher. Okay, good. So we've got the colors, we know what those do. And then I want to talk about accumulation, just so you understand what accumulation is. Michael, have you talked about accumulation and at all in your material, or?
Yes. We've covered it, and not extensively. I mean, we're just beginning with that, Suri, but they do understand what accumulation is. They understand the white candles are accumulation. So I would say they have a very good general idea of what it means.
Okay, excellent. That's perfect. I'll show a very quick slide. Let me put this on here. Okay, so just to run through this very quickly, accumulation. I mean, you see a price goes up, it accumulates for 3 periods, then it continues going higher. And you can see that the indicator very kindly draws these nice white candles for us that show us where accumulation is. And so what I like to do is to focus on what is actually going on inside these candles. Is price just simply moving sideways, or is there a story being told inside these? And there really is. There's something very important going on in here. What price is doing, it's actually filling orders. So we're accumulating orders because we're on the buy side, because we're the buyers. Then you have the sell side, which is our broker. So the broker is selling liquidity to us, and so they sell to bring price higher. Excuse me, a bit of a cough there. And we're buying to bring price higher. And so this period of accumulation is simply price moving up and down, filling orders, typically limit orders or stop orders. And so then you ask yourself, well, what is it that actually moves price? Is it the filled orders or the unfilled orders that's moving price? And it's the unfilled orders that does. The price chart is simply showing us the orders that have already been filled. The unfilled orders is where price will typically gravitate towards. Let me show, as an example here, a couple of slides down. I just want to show what it looks like. Okay, if we have a look at this, this is when about 2.5 years ago I quit my job because I wanted to trade full time, not advisable, but I did so because I wanted to study supply and demand so I could finish this software. And I was studying, I was focusing on currency strength at the open of the London session. So this is GMT 800 hours, London, and this is 15 minutes into the session. And I was noticing a pattern emerging that after 50 minutes into the session, then price would typically, if it broke out of this box, it would typically continue. And now I was doing this on a very small time frame, which I don't recommend, but it was a very good study because it enabled me to refine my understanding of accumulation. And so accumulation is typically price moving to a certain area, and then price will move, up and down like this. And this is accumulation. So on a higher time frame, these candles are going to be painted white. These ones here, and these ones down here. And that is because inside them there's a very specific price behavior that the indicator is qualifying as accumulation. Okay, good. So the accumulation candles, you can see they're absolutely everywhere, but not all of them are important. You have to really focus on the context. Context is absolutely everything. So we have accumulation here. Are these important? No, they're not important at all. But we have accumulation here. Is this important? More so than this, but not as important as, for example, this or this just here. And so you have to focus on the white candles in relation to the green candles. And I've recently made an update to the software, and I think you guys have the latest version. And this was an attempt to improve the extended range candles, which are the green ones. Let's bring just to the next candles. And these candles here just show us a high volume, big pushes that as a relative to preceding price movement. And so this candle here, the body of the candle is big in relation to the whole size of the candle, and its length is much bigger relative to the previous candles. And so this candle here is a very high volume candle, so we know that when price moves away from an area like that, then we have a lot of selling going on at the area just before. If we have a look at, we have another one here. This is a really nice example, a nice green candle that leaves. And just before that, we have the white candles, and these are the ones that are interesting to us. Let me zoom in so it's a bit clearer. And you can see how price comes down to this area. We start to form these accumulation candles, and price pops up. And so it's not about trying to guess if this is bullish or bearish accumulation. When these candles are forming, you have to wait. And a lot of people who trade breakouts will often find themselves getting in too late. So price gets up here, and then they buy. But I mean, then where do you put your stop? So you have to wait until price shows you what it's going to do before you make any decisions. And price broke out. And what does that tell us? Well, that tells us that we have willing demand down here. So we have people that are willing to buy this currency pair at this price, at roughly this price area. So this is where you want to target an area to buy. So price comes down here, and typically price will it'll return to an area similar to the way it left an area. And so price left here, it came down pretty quickly. We accumulated for an extended period of time, and then price poked into it again. But these green candles approaching accumulation shouldn't scare you. They shouldn't keep you out of the trade, because you know that you have a lovely price imbalance here, the upper hand going to demand. So you simply place your order to buy around that area here. So the indicator is showing these lovely accumulation candles and the green candles. And so you want to try and focus on where they are in relation to each other. This is a really nice example just here. You see how price rallied. We accumulated for less than 5 periods, which is what I like to see. And then we had a really nice push where we had 2 green candles afterwards. And when the area of accumulation here was able to accumulate enough bearish sells to move below this low here. So this is great. So this tells us that we have a price sensitive area here. We have another one up here. Price rallied, we accumulated, and price has just gone down ever since, and price has not looked back ever since. And you can see that this candle is not green. It shouldn't stop you. It looks like an extended range candle, but the indicator hasn't qualified it. So it shouldn't stop you from considering this to be an extended range candle. It's just that the indicator is it's had a bit of a tough time figuring that out. I'm trying to refine it, but it's a bloody difficult algorithm to perfect, and it probably never will be perfected, but I'll certainly improve it as time progresses.
And that happens with the accumulation candles too, Cerise. Sometimes there are some red or blue that really should be white. You know, you can consider them accumulation. Yeah. Definitely.
And so it's yeah, it's there's no artificial intelligence in there. It's just based on some criteria that I programmed into the core of the software. Cool. So here's just we have another example. Price rallied. We accumulated for 1, 2, 3 periods. Then price went back, and look how it went. It really went down, and we managed to consume this demand here, which was tested once, twice, 3 times. The 4th time was the one that took it out. So this area of supply here was the one that's responsible. So this is likely where we're going to get the response. But again, all this stuff that I'm rambling on about these, because this, then that, I'll cover this in great detail in a webinar, perhaps next week, whenever Michael and I manage to get it positioned. Good. So okay, good. Let's have a look at what else we have. We also have these enable these round numbers, and these round numbers are interesting when you're on the, for example, the daily chart, because they are showing us where we have, let me go back here, where we have round numbers which are psychologically significant. And you can see that price often bounces between these lines pretty nicely. I don't use them. I simply eyeball the chart. They're not important to me. They're just kind of an additional layer. So if I have a nice area of demand down here and I want to buy it, and I can also see that it overlaps with the 110 area, then I'll feel even more comfortable about buying there. But I won't put it on. Number one, it's insanely noisy to look at. Number two, I simply wouldn't trade round numbers simply because they're round numbers. But it's there if you want it. Then we have the supply and demand information here. So we have supply and demand analysis. This is enabled on my charts. We also have compact supply and demand. So show compact supply and demand. If I turn this on by enabling, setting it to true, you'll see that all of the rectangles have disappeared, and now we have these checkboxes there instead. And this is simply to help remove clutter on the chart. So you can go here. Before we had a ton of rectangles all over the place, and now we only have these check marks. And so the software is programmed to color code everything, and you can see down here we have 4-hour, daily, weekly, 4-hour, daily, and a couple of 4-hour areas of demand down here at this area here. It's not showing you where they are, but it's just bringing them to your attention. If you like that, then you can do that. I used to do it a lot, but since the update to the indicator, I've started to have these areas drawn on the chart for me. Okay, if you guys have any questions, just fire them in there, and I'll keep my eye on it. Okay, some questions. Let me get these questions. Okay, Gary's asking, do you use supply and demand levels to trade short term? Yes, I do. I don't normally trade short term, but I've started to look into it a little bit as time permits. I just want to show a couple of trades. I missed 2 trades today. One on the Aussie yen. And it was here. Let me get these. And it was right here. I had a buy down at this level here, but it was just above this green box, which is a 50-minute area of demand. I thought it was a really nice area, and it was, but price didn't reach my entry. And this is on the 50-minute chart. I know a guy who uses this software, and he's on the 5-minute, and the 50-minute, and the 30-minute chart, and he's absolutely killing it. It requires, it's very, very intense. It's very, you can't leave the chart. Sometimes you can't even look away from the chart when you're in a trade, because you have to scale out, reduce risk, and so on and so forth. And so for me, it's not a way I want to trade. But for short spurts, maybe 1 or 2 trades like this, maybe 1 a day, I think then it's perfectly fine. You can definitely use it. And you'll notice also that the price is reacting at these levels. It's incredible. You can see here where price stopped. It stopped right at this 50-minute area of supply. It's the weekend, so it'll probably gap up or below Monday morning, but it's absolutely phenomenal. So if we have a look at the Kiwi, there was another one on the Kiwi down here today as well. Price poked into that and went north in a real hurry. We also had another one on the Aussie US dollar. Down here today, price came down here. It stopped at the hourly area. You can see we had the hourly area, which is the white one, the half an hour, which is this gray color, I think it is. Then we have the 50-minute, which is just here. And price found support here on on the hourly level, and then it went up. And where did it stop? It stopped at this 30-minute area of supply, which is an obvious place to take profits. And you can see how we have a lot of these thin areas here, and prices slowly grinding through those. So some of those will probably disappear when the sessions open Monday morning. And then there's another one on the euro today. This is a half an hour trade up here at the top. We had the 4-hour area, we had a half an hour, and a 15-minute area nested within it. And price went up, poked into it, and then the bottom fell out. Well, shorter term. And I mean, the size of these are incredible. I mean, 3 pips. Of course, you'll probably get stopped out just by the spread alone if you had a 3-pip stop. But it's just to show you that the sensitivity of these areas is quite staggering. And when I introduced this, the rectangle drawing functionality, I didn't realize that it would be this accurate. But it's absolutely phenomenal how accurate it is. I mean, you see this little area here, which is a nice, like an independent area of demand. There was a tiny stop there. Let's see what that was. That was 3 pips, and price came down to it and went up. And then it still held. It's still held. And that's been tested once, twice, 3 times in the past. So it's phenomenal, and it works on the smaller time frames. Yes, it does, but it also works on the daily as well in the exact same way. We have an example here. We have the 4-hour area. You can see located in this wick, and this is where price has found support. And we've seen a lot of interest in buying at this level here. And so you'll see this on all time frames, all the time throughout the day. Excellent. Okay, Michael is asking, after you find the accumulation, are you going to set a sell limit or buy limit by order on the break? Where was that example? I think that was the Aussie. I normally don't do the break. I'll wait for price to move out. If we look at this one here, I'll wait for price. Sorry for this flicking around on my charts. I'll wait for price to leave, just to show me what direction it's going to going, and then I'm going to buy at demand. And the reason this is interesting is because we also have a trend line break, and 2 ways that you can qualify supply and demand. Again, I'll go through all of this in our next webinar. Is you look for a trend line break at an area of supply or demand, and you can see we have a 4-hour trend line break. We have a high, we have a low, we have a high, and we have an equal low or maybe lower low here. And when price left here, it managed to move above and through this trend line. So that qualifies this area down here as demand. And this is where price referenced roughly on the release to the upside. And so I'll always want to wait and see. So for example, here, if I was looking to short, I wouldn't just click in when price starts moving, because when price is moving fast and you're trying to get in, you're going to get punished in a major way with slippage and get filled at a pretty poor price. And so price is going to have to move even further for you to get the risk out of your trade. So the best thing to do is to wait for price to show you. It showed you when this candle has closed, and it wriggles back ever so slightly. And so it tells us that we have an interesting area up here. But qualifying these areas is a lot more, we have a much more thorough approach than just looking at them and saying green candle, white candle, sell. There's a proper method of doing it, and I'll go over that in the next webinar. Okay, let's have a look at what else we have. Okay, we have these. This one here, the next settings show consume supply and demand, and if you set this to true, and the indicator is going to draw these X's everywhere. You know what? Let's remove some of this noise, and we'll remove the -1 so we can see straight, and we'll have a clearer picture. There we are. This is much better. And why are these important? Well, let me show. Okay, the two ways that you can qualify an area of supply and demand is you can look for consumption of opposing qualified supply and demand, or trend line breaks. We've looked at the trend line breaks, but we haven't looked at the consumption of opposing supply and demand. That's what this is showing you. These X's are supply or demand that have been consumed. And so this was an area of demand, and it is no longer there. What area took it out? This one did here. So this is a point of origin for the area of supply responsible for the consumption of this area of demand. And you can actually see that this is a child. Where's the parent? The parent is here. So price has already been back here, and the whole move originated from this level here. So we have the supply here, and this is a reaction to this supply. Then price left. We have these areas here. We have some 4-hour areas of demand, and these are no longer valid either. The last one, which is the most important, is not valid. Why? Because, excuse me, it's been consumed by opposing supply. What area did it? Well, this one didn't go below it, but this one did here. So we don't have a daily area, but we do have a 4-hour area. So it's this area just here. So this one here is responsible for consuming this demand and this demand. So this is the one we want to target for an entry. And the reason we do that is because we want to find the areas of supply and demand that have proved their worthiness, their strength. And you do this either by causing market structure to fail using trend lines, or to consume opposing supply and demand, which is what I've programmed into the indicator here. And it just helps you backtrack. And so, a really good way to use the indicator is to, let's say price is here and you want to find a place to get in, just mark off an area of valid demand. We have valid demand here. Then you start to backtrack. You say, okay, this was valid demand, but it's no longer valid demand. Why not? Because it's been consumed by what? By supply. Where's the supply? We have a lot of probably micro supply in here that did it, but you can see that we have an accumulation candle in here prior to release. So we'll move the rectangle here like this. So this is the area that did it, and this is still holding. And the indicator, it's not going to show you the ones in the middle because these are the lower probability. It's going to, you have to find those yourself, and with a lot of practice, then you'll be able to spot these very quickly. But the indicator is showing you the most highly probable areas for price to bounce, and these are going to be at the minor and the major swings. So we have one up here, we have this one here, and we have this one here. This one here is actually a child. The parent is just here, and so you could consider taking the child or the parent because this area appears to be pretty interesting. And so the indicator is simply showing you these X's, and these are the consumed supply or demand. Okay. Okay, let's have a look here. Okay, then we have some other settings. We have the supply and demand significance. And what does that mean? Well, it means that, well, just stated very simply, the higher the number, the more important the levels will be that are visible on the chart. So if you move this to, excuse me, 50, just to do something a bit outrageous, you'll see that a lot of these levels are going to all of a sudden not be there. But the ones that are on there are the ones that have an incredible amount of clout. This one is still here. This is a good area. This is a really good area to trade. Here we have another good area to trade. We go to the daily chart. You can see that we have these really high probability areas of supply and demand. And you'll see here as we reduce this number, the indicator is going to start qualifying additional areas. So here we have 1, 2, 3, 4, 5 areas of daily supply and demand. If we reduce this to 20, this number is probably going to go up by a bit. As you can see here, we have a couple more up here. And so if you drop this down even further, and you say, for example, 5, which is, I like to use between about 5 and, I don't know, 13, you'll see then all of a sudden we're going to have a lot more. You're going to get all of these semi-important areas nested all over the place. And these are good. I mean, this is a decent area here. I mean, look at the way price left. But due to the fact that the significance is less, you're just going to have to manage it a little bit differently. Okay, so if you want to be certain, then you can put this number on, let's say, 10, 10, 11, 12, 13. I like Fibonacci numbers, so I put it on 13, but it doesn't really matter. You can put it on 10 or 15 or whatever. But just keep the number around 10. I think, Michael, you're using 10, aren't you? So that's a...
Yep, we use 10. I've always used 10, found that to be a good, peaceful, happiness, middle of the road type of a number.
Yeah, it is. It's a decent area, I think. A good place to be around 10. So you put it on 10, you'll be shown some pretty decent areas. Good. Okay. Well, let's continue looking at the other settings. Here we have the greater period multipliers. And what does this mean? Well, the indicator is constantly analyzing price on a bunch of time frames at the same time and modifying, removing and adding visual objects as price continues to develop throughout the course of a day, week, month, or year. And via these parameters here, the greater period multipliers, you're telling the indicator which time frames to use when performing this supply and demand analysis. And so the greater period multiplier, if you set this just to 0, which we'll do, you're telling the indicator to only show you the areas of supply and demand that are available on the current time frame. So you can see they're red. We have red colors. This means daily charts. We go, go to the weekly chart. We only see weekly. We go to the 4-hour. We only see 4-hour. You can see, so it's only going to show you these areas of supply and demand that are on the time frame of the chart you're looking at. That's good, but wouldn't it be nice to be able to see, for example, 1 time frame greater, or 2 or even 3 time frames greater? So this is easy. So what you do is you say, currently we're looking at the current time frame plus 0, which is the current time frame, or current time frame plus 1, plus 2, or plus 3. So if you go like that, you're going to see that if we stay on the 4-hour chart, we're going to have 4-hour chart levels, daily, weekly, and monthly, all on the same chart. And so you'll see these blue, red, orange, and purple levels appear on the chart. You can see that we have, you can see them all over the place. We go to the 1-hour chart, and you're going to see we have the 4-hour. If you go to the daily chart, you're going to see we have the monthly area down here, which is a nice whopping area. And we have weekly, daily, and so things really change. But assuming for a second that you want to see micro areas of supply and demand within these daily and weekly areas, then you can do, let's remove some of this noise a bit. We'll just go like that. We're going to tell it, okay, I want you to go 1 time frame down. So you put -1, and this is going to simply mark up the charts. So now we're going to see the current time frame plus 1, current time frame -1, which is a 4-hour, which brings all of these blue rectangles on our chart, which are the 4-hour. You can see there are an awful lot of them. Again, you set the significance a little bit higher, which we'll try. We'll put it on 20. And you'll see that some of these levels will probably disappear. So here we have fewer. So here we have the more significant areas. Here we have this one here, this one, and the other ones. And here we have a few nested areas that are located within this daily area. And here, this is the nice one. We have a weekly area with a daily area inside it and a 4-hour area inside that. So that's pretty straightforward. Good. Then we have the enable manual trend line. Did you guys have any questions about that before I move on, or is that super clear? Cool. 10 it is. Good. Excellent, Jose. Good stuff. Okay, so let's have a look at the. Oh, where's the mouse gone? There it is. Let's look at the trend line. Turn this stuff on. Okay, so we have the trend lines here. Enable manual trend line management. The manual trend line management tells the indicator to take control of trend lines that you draw on the chart. So let's say you're eyeballing an area, maybe these lows here. Let's put something close to price. So you have maybe the low here. You like that area. If we had a price feed, we would get this changing, and you can see here that that trend line has now been changed colors, so now it's red. What does red mean? Red means it's the daily chart. So when you go to the 4-hour chart, you can see just below we have this red level. You know this was drawn on the daily chart. And so it's managing horizontal and diagonal trend lines on any time frame that you draw them on. If we draw it up like this, it turns blue. Excuse me, that tells us the 4-hour chart, which is great. And it's also doing these, as I mentioned, the diagonal trend lines. And this we use when we are qualifying supply and demand based on market structure failure. And so you can use the horizontal and the diagonal for that. So we have a high, a low, a lower high, and a lower low. So the trend line for this would go like that. We refresh, and you can see it's turned blue, so we know this is a 4-hour trend. And when you're able to draw a trend line like this, then you have a 4-hour trend. So now on the 4-hour chart, we have a downtrend, which is great. So it's just simply doing that for us, which is nice. I like that. I wanted to be able to see rectangles and trend lines on all time frames, but I wanted to be able to know which time frame I drew them on. And so this is just a simple way to do this, simply color coding all of the objects. All right. Okay, good. So now we have automatic trend line management. If you set this to true, the indicator will draw. Let me delete all of these objects just to clear things up. The indicator will draw trend lines for you. You can see it's doing it automatically. And if they're there, then it'll draw them. If they're not, then it won't. And it's drawing these as soon as possible. And so some of them will likely be invalid. This one I saw on the 4-hour chart. This is not valid because when price left here, it did not move above this one here. But it was a trend line. It was a nice, clean trend line, and we had a trend line break. And so it defines the structure of market nonetheless. And here we had a trend line break. The area of supply that caused the break of the trend line was this one just here. And it's like a pretty handy tool. I don't use it that much generally, but sometimes I'll flick it on just to see if it's provide any kind of insight. Okay, so we've got that. Then we have turn all of these off. Yeah, this the trend line extension. This simply tells the indicator if this should continue on into the future forever, or if it should stop at the second point. So if you set this to false, you'll have a trend line from here to here. It wouldn't shoot out into the future like that. Then you have the style, of course. You can define how you want it to look. That brings us to the rectangles. So enable a rectangle management. This is a really cool tool. I always have this on true, and I always have fill rectangle on false. Otherwise, the charts get pretty bloody. I'll show you what that looks like if we draw this here, for example. And if you set this to true, then things get pretty it gets a bit brutal. It just kind of fills the hole. Yeah. So if you're into that kind of thing, the option is there. Not my cup of tea, but it's there. Okay, then we have a couple of other settings which are pretty important. And that is the extra capital and the risk. So assuming that you have, for example, decided that you want to risk 1% per trade, then you put 1 in there, and you press OK. So now the indicator is going to look at the size of the rectangle, and it's going to tell us how big the stop is. So the stop is 31 pips, and based on the risk parameters that we just specified, we have a position size of 0.28. So we can sell 2.8 mini lots if we short up here at the top. And so it's just a way to help with position sizing calculations and stuff like that. And it's just a pretty nice feature. And it shows you the bottom here, so you know where the entry is going to go. Just here, 77.18. So we would sell 2.8 mini lots, the sell, the price would be 77, let's say 18, and we will have the stop at 77.50 at the top there, like that, and the target would be somewhere else. So you press place, and then the position we put in the market based on the location and the size of the rectangle. So that's a pretty nice feature that enables you to quickly mark these areas off and enter positions. Then there's something called extra capital, and this is pretty important because some brokers that some people use are perhaps have potentially a bad reputation, or located in parts of the world where regulation is not as strict, and so sometimes if you, let's say you had $100,000 and you didn't want to put all of that in your account, you want to put $20,000 in your account, well, then you would simply add the additional 80,000 here. So you put 80 there. The indicator would read the account balance, which is 20,000, and so now 1% will be $1,000. And so now the position size goes up to 2.21. So if the stop gets hit, we are going to lose 1% of the $100,000 account, which is $1,000. And so that's just a nice way to be able to calculate these position sizes without having all of your money in your brokerage account, which I know can be a good thing, especially after the Swiss franc episode. Okay, good. Then we have accumulation. Yeah, this is just you enable these, and that's pretty much it. And then this down here is really interesting. This is enable order levels. I need a web browser to show you this.
I have not gone over that with them. I seldom use it. I don't know. I found it more confusing than anything. But
yeah, I know that I know a couple of guys that use it, and it can be useful, but it's not something that I've spent a whole lot of time on.
Yeah, because they could take those, they can cancel them anytime. I mean, anytime really.
Yeah, they can. They certainly can. But there's a website called forexlive.com. Sorry?
Yeah, but show it to them. Yeah, I want them to see this. Yeah. How to use it.
You go to forexlive.com, and there's in the menu here, there's more, and look at Forex orders. If you go here, and you find the pair that you're trading, the Aussie dollar, US dollar, if we scroll down until we find that, there it is. You click on this, and here we have some orders. So these guys, they have contact with the guys that are on the floor in the various exchanges across the world, and they are able to get this order information from these traders, and they post it here. And so what you can do is you can simply copy this and you paste it here. So you paste that into the bids. You have to remove the hyphen numbers because those are needed. Go like that. Then we go back and we get the bids. And you go back here again. You paste those into here like this. Just have to clean it up because sometimes these guys make some typos, so it's good to clean up the values. Then you press true, enable that. And there's a value here at delimiter, and delimiter is a space. You can see there's a space in here, and the space corresponds to the value in this string of characters that separates the price levels. You can see there's a space between each price level. Okay, so you press OK, and so now the indicator will draw these price levels on the chart, and if they overlap with with your own levels, then there's another reason to sell or buy at that level. You can see down here we had an area an order level, which is down here at the 74.50. Price touched it quite nicely, and there's a big wick here, so I'm sure there is probably there it is. Look at that. We have, you know what? The indicator would have found this. Let's turn it on. Yeah, the indicator found that, and it overlapped very nicely with this order level. It's just a very beautiful price structure actually. This is the one that I missed today, and then price went up like that. And so it's just maybe a nice way to see where these levels overlap. But you'll notice that on almost all of these, they're all located at psychological round numbers. So you have 50 levels. You have the 50 levels, the big figures, multiples of 20. So you have multiples of 100 pips, multiples of 20 pips, and multiples of 50 pips. That's where 95% of all of these order levels are located. And so you don't have to put them in, but you can just be mindful of the fact that, okay, down here we have the 50 level, up here we have the 80 level, which price touched very nicely. Again, a really nice area. This right at the base of this accumulation candle to the pip. And then we have another one up here. This is the big figure. This is at the 20 levels, 20 pips above, which overlaps very nicely with this one here. And so you don't really have to spend, I wouldn't spend too much time on this site, because as Michael says, these orders can be pulled anytime, and they're normally updated once a day. So they'll put them on generally as the sessions get going, but they're probably not going to be valid on the following day unless a price is still to reach the area where these orders are located. But you can look at them if you like. It's maybe interesting, but I wouldn't pay too much attention. I would certainly focus on price instead of these. Excellent. So that's a little bit about the orders, false, and that's that. And I don't use them, but I mean, you can use them if you like, but the option is there either way. Good. Well, that's the run through of the functionality. Is there anything there that you're looking at that you think, what the hell does that mean? Or I wish you would explain this a little bit better. Is there anything?
So Reed, explain to them the bottom left-hand corner. We have it on the top right of ours, but just explain, the trends and the daily and the weekly and the monthly, the average ranges there too.
Yeah, of course. Well, this is, you can see that we have, well, first of all, this is green, this is white, then we have some arrows. So there's a lot of information here. First of all, these arrows tell us something about market flow. So you can see that on the 50-minute and the 30-minute, we have higher highs and higher lows. On the 1 hour, there's a clock, and what does that mean? Well, that means that the price is a little bit confused. So based on market swings, there's not any clear reading for the time being, but as soon as we get a clear reading, that'll change to either a green arrow or a red arrow. On the 4-hour chart, we have lower lows and lower highs. On the daily chart, we have the same. On the weekly, we're waiting for fresh information. On the monthly, we're moving higher. So that's all that means. Then down here, we have a range information. And so D1 corresponds to the daily button. So this is daily range information, this is weekly, and this is monthly. And so the value on the left is the average of the past 5 days of trading. So if you take the past 5 days, you add them together and you divide by 5, that gives us 56. So we have the average daily range of 56 pips, then we have a forward slash, and then we have 43. What does that mean? Well, that tells us how far price has traveled today. So today, price has not traveled the average daily range. Also, it's Friday, so that probably explains why. But so when we have the average daily range and the current daily range. And then here we have the week, and the week is, this value here is the past 4 weeks, added together, divided by 4, and then here we have so far this week, you can see the prices traded out of the range for the week. And then we have the monthly reading over here, and this is the past 12 months added together, divided by 12, and this is how far we've traveled so far this month. So we are just over halfway through the range for the month. And this is interesting because if you are looking to trade, for example, London closes, then you want the current day range to be equal to or have exceeded the daily range into supply or demand. And so this is why this information is here. Also, typically you'll find that when price reaches the range, the weekly, monthly, or daily range, it'll very often kind of begin to bleed back in because sometimes they run out of steam. So that's all that is there, and you can move it wherever you like. You guys have it up here on the top right, but you can completely remove it if you don't want to see it by setting that to false. You can also remove the range information. But we also have a color here. And what does that mean? Well, green means buy, and red means sell. I wish it was only that simple. But it's pretty interesting because we have two currencies here. We have the Australian dollar. Sorry about that, coughing like a dog here. So we have the Australian dollar and the American dollar. And the reason it's green is because the interest rate on the American dollar is higher than the interest rate on the American dollar. So an Australian dollar is higher than the American dollar. And so if you're holding large positions for longer periods of time, you'll be earning money every day at midnight when your broker clicks over to a new day. Also, I think on Wednesday they have sometimes 2 times swaps, so you have to pay 2 times swaps every Wednesday, once a week. And so it's really nice, especially if you're trading 10, 20, 30, 40, 100, 200 lots, then that can mean big bucks. And so sometimes if you're doing that, then you trade in line, or you could consider trading in line with this. The same applies for going short. So if you're short this currency pair, you will be paying swaps every night, which can get pretty expensive if you have like big swap differentials and big position sizes. And so if you pair currencies that have high yields, the New Zealand dollar with a currency that has low yields, let's say the Japanese yen, or some other perhaps negative interest rated currency, then you're going to get some incredible opportunities just for a carry trade. So you get it in a place and you simply hold the trade, and you're earning money every day, even if the market is moving sideways. So that can be perhaps another feather in your hat regarding kind of longer carry trade position trading strategies. But that's pretty simple. Yes, Gary is asking, how do you get to the settings? You mean the settings of the indicator, Gary? If that's what you mean, you simply right-click on the chart, you go Indicators, and then this brings up the list of indicators that are currently attached to the chart. And then you can either double-click on the supply and demand indicator or mark it once and press Edit, and that brings up all of these settings for you. Okay. Hey, my pleasure, my pleasure. Yeah, and Derek is asking, Mike, do we have Sarid's currency strength information? Do they have it, Mike?
Yeah, they have it, but you know, we haven't really talked about it yet because quite frankly, you just gave it to me. You know, I mean,
yeah, that's right.
That's right. It's brand new. I'm still trying to get the hang of it.
Yeah, should we maybe?
I told them, you know, we've been using MACD, and well, okay, this is much better, but I got to really get familiar with this as well. But I'm going to incorporate. We're gonna do stuff on that. But they have it. They physically have the indicator. Just we haven't gone over it.
So they have the histogram.
Yeah, they have the histogram. Yeah, they have the. Yeah, they don't have the old style. They have the new histogram.
Okay, cool. Shall I show that quickly?
Yeah, show it quickly because they have it on their default charts. It comes up on their charts right now.
Ah, perfect. That's brilliant. Let's have a quick look at this indicator. Right. This is a histogram, and it is a histogram of the difference in strength between the two currencies that you can see on the chart. So you have the Australian dollar and the American dollar, and there is a ton of information that is actually being added to the chart, because if we look at the Australian dollar here, this software is reading all of these currency pairs where the Australian dollar is a part. So we have this one here, this one here, this one here. There are seven or eight of them, and it looks at the price of each of them, and it calculates an index on all of them. Then it's ultimately calculating an index for each of the 8 traded currencies. So instead of just having a dollar index, it's calculating a dollar index, pound index, CAD index, yen index, franc index, and all the other indexes. So it has 8 different indexes. So when you attach it to a chart like that, it's showing you what's going on between these two currencies across the board. So when you see price dip into an area of demand like this, you may be wondering, I wonder if this area of demand is going to hold or not. Well, you can see here that we have a really deep push on the second low here, moving into this area of demand here, but we didn't get like an equivalent push lower on the histogram. So that tells us there's a pretty good chance that this is going to hold. And so I'm normally using it for a divergence, a currency strength divergence. So instead of using the MACD, we can attach that quickly. MACD, I think it's this one here. Better change the color to something else. Okay, so if we move it like that, it's showing us some similar information. You can use it into a pretty similar way. But instead of having information based on moving averages for only this currency pair, it's doing it with like close prices for all currencies that your platform has available. And so it's really giving a lot of information. And so when price is kind of, when it's rounding, forming a nice round bottom like this, and it starts to move higher, then this is generally a pretty good indication that you should start to buy and move higher. Let me remove this from here. The same for the opposite direction. When price is starting to move lower like this, a pretty good indication that you should start to position yourself short on the smaller time frames. And so what you can do is you can, let's say your entry time frame is the 1 hour chart, and so you're wondering, I wonder what's going to happen here. So you go to, for example, the daily chart, you could see, okay, actually currency strength is moving lower. You go to the weekly chart, currency strength is starting, you can see how it's starting to move lower here. So you can see that this pair will probably start to drift lower. Looking at kind of bleeding edge strength information, this is slowly starting to tick lower. On the daily chart, it's already started to tick lower, and on price you can see that it's very clearly price is indeed moving lower. So if you go to your entry time frame, which is a 4 hour or the 1 hour, then you start to look for areas to sell. Why sell? Because on the weekly and the daily chart it's telling you to sell. And so then you position yourself short, and you pick your price levels to enter at using the supply and demand software. And so this is telling you what direction to trade and when, and the other indicator, supply and demand, is showing us where to trade. And so combining the two is incredible. Here we have that same divergence trade here. Our price went down. We had a low, a high, a much lower low here, but you can see that the strength is not supporting that. So the Australian dollar were gaining strength in relation to the American dollar, and so you wait for price to release like this, and then you look for the green candle, and then you buy at the accumulation like we had here. And you can see here again, prices was moving lower, but you can see that price was stabilizing here at the bottom and maybe potentially moving a little bit higher here. Price broke, then you target the area of accumulation that caused this at the base of the sharp move, which is down here at the base, and then price drifted higher. And so you can use it for a lot of different things, but I find myself using it, positioning myself in sync with the longer term, and also for divergence. It really shines for divergence trading very much. And you can see here's another example. Here we have a high, a low, a higher high, but you can see the strength information is not supporting this pair moving higher, and so you simply want to position yourself for short. Here we had the price, the green candle, the accumulation prior. Price didn't get there, you probably wouldn't have gotten filled, and then price went lower. And so this is what I'm using this for. It's a pretty cool indicator, and it's super simple. And as a matter of fact, I wrote a brief article about this on the Pipnotic website that you can read if you like. And on the previous version there were a couple of lines, but I removed those lines because they're taking our attention away from what's important, and that is the difference between these two currencies. You don't really care which currency is strong and which one is weak. You just want to see the difference between the two. And so this is showing us exactly that. And so you can incorporate this with the other strategy. I know that Michael has been teaching you guys where you use traditionally the MACD and the market flow to take trades on the shorter time frames, which is a pretty marvelous setup as well. Okay, William is asking, what is the difference between this and the MACD? Well, the MACD, the information that the MACD uses for drawing the lines in the histogram is taken only from the current chart that you're looking at, and it's based on moving averages, where this is looking at all pairs that contain the Australian dollar and all pairs that contain the American dollar. So it's calculating an index for the Australian dollar and the American dollar, and it's drawing the difference between those two currencies, which is what we can see here. So you're seeing a much broader range of information using the histogram in contrast to the MACD, where you're only seeing information that's based on the pair that the MACD is attached to. Yes, so Derek is asking, this new currency strength in the histogram replaces the old line graph chart you used to have. Sorry, coughing like a madman here. So yes, I think so. I think eventually MACD will be replaced with this. Maybe when Mike's had a bit of time to test it. Exactly.
I love it so far. Yeah, it's phenomenal. It's phenomenal.
Yeah, it's pretty amazing. It's pretty amazing. And it's simple. I mean, I removed everything except for the histogram, so you can really focus on the important stuff, which is the difference between these two currencies. And so, yeah, when it's above, you buy. When it's below, you sell. Yeah, pretty much. And there's also, I mean, there's a setting in here as well, which is the look back. And the look back is simply a setting that tells the indicator how far back to go when calculating these values. So it's looking at currency strength now, so bleeding edge price for all of all 28 currency pairs, and it's comparing that with a price 20 periods ago. And so it'll show you the development of price now compared to the price 20 hours ago. But you can do it much shorter. You can go, for example, 5, and then you'll notice that these will be a lot more active. You can see they're kind of jumping all over the place. Or if you want to see kind of longer term, then you can go, for example, 50, and it's going to show you a lot more accurate what's going on. Yeah, but I find that 50 is maybe, it's not going to show you when price is turning around, not as quickly, and I think 20 seems to do so pretty well. But you can fiddle around with that, and you can find the value that suits you. And if you find something that works really well, I'd love to hear from you and hear your insights. That would be phenomenal. Yeah, so that's that one as well. So I think we've been pretty much through the supply and demand software and the currency strength histogram. There are a couple other versions of the currency strength, but this one is super simple to use, and its usage is pretty intuitive. And so I shan't go into detail with the other stuff. The other stuff is pretty confusing because it's showing a lot of lines and it requires a ton of chart time to get used to. So I certainly think that we'll focus on this, and this is actually the only one that I'm using at the moment.
You know, Siri, the other supply, it's funny. Whenever I look at the other one, it looks almost something like in a science lab, like on one of those radar screens, yeah, like a ray or something. It's you know, but that's what I used to look at, and you know that in and of itself is very invaluable. You know, you can't just, I mean, you look at a USD CAD chart, for example, you know, and if you're going down, you know, you have to understand what oil's doing. You don't know, is it USD related, CAD related, is it oil? You know, it's good to know what's going on with all the pairs, and you can't look at all the charts. So the strength is really important.
Yeah, it's incredible.
Spectrum. You have to know that.
I'll show you the version that I think Mike's referring to. Is it this one here? No. With the
lines. Yeah. The one you have on your presentation.
All right, those ones. Yeah. Have you used this one before?
No, I've never used that one.
This is pretty good because each column corresponds to a time frame. This is.
I like the squiggly lines, and you know you see the strongest versus the weakest.
Yeah, exactly. It's
visual.
I mean, this one's. I mean, the reason I made this one is to just to show a lot of information
Oh yeah.
in
Oh,
a relatively simple format. And so here you can see that we have. Yeah, so the markets are closed, can't get data, but you can see that we have all the red, the thick red are the weakest for this time frame. Here we have, this is the 4 hour, this is the daily, this is the 1 hour, half an hour, and 15-minute. And so on the 50-minute chart, the New Zealand dollar is the weakest and the CAD is the strongest. The second strongest is the Aussie, the second weakest is the Japanese yen. And so when you see all of these lined up, for example, today on the euro, it was bold green all the way across, and the yen was bold red. And if we look at the euro yen, this thing was on fire today. Yeah, it's been like, well, for a while, it's been moving higher. And so I was, actually it was also the Kiwi, the euro Kiwi was also moving higher today. And so I was trying to get long on this today. And yeah, price never came out. Anyway, the market's closed. But I mean, price was really supporting buying this pair based on this information. But then you have to find out where you want to get in. And then again, what do? You look at the supply and demand software, which pretty much serves you your entry and your stop. Yeah, so price had a pretty nice reaction. But this was yesterday when this price came back and tested here. So it's pretty nice because it's just showing you a lot of information, what's going on across the board from the weekly all the way down to the 15-minute chart. Yeah, so yeah, so you can whatever you want. I don't mind. I'll gladly help you guys figure out what you want to do. But I think for the time being, I think the histogram is just an incredible.
Yeah, definitely. I have to work with it more, but yeah, definitely. It definitely, by all means, is superior to the other ones once you get the hang of it.
Yeah, I think so.
Yeah.
I think so.
We're going to be using that. We're going to be using that for sure.
Excellent, excellent. Yeah, Williams is saying it would be nice to go back on a chart in history and show what trades we would take and why and see the results. Yeah, definitely. But it's the thing with currency strength. It's a little bit difficult to go back. With this version you can, because I've made it so that you can simply scroll, but you have to have historical data. Because I've experimented so much for such a long time, I have tons of historical data, but I mean you have to have historical data in order to do that. If I go to the weekly chart, you can see I don't have weekly historical data, so you can't really scroll. So now it's downloading. It'll start downloading, and on the monthly, it's probably even worse. Yeah, well, and so you have to have historical data. So it requires that you download it, but you can download that in the history center in MT4, and you can simply click on the time frames you want, download them, and everything's good to go. But then you have to remember to download history for that time frame on all 28 currency pairs. So it's a bit of a long-haired ordeal. They use the term long head in Danish. I don't know if you can say that in English, but yeah, anyway. Yeah, so that's pretty much the two indicators there. Is there anything you want me to run through, Michael? Anything else?
I think we covered everything. We have those two presentations we're going to do.
Yep.
Supply and demand, and then the imbalance presentation. That because again now they know the indicator how it works, but now it's like how do we really get into this? Determine which trade to take. Why does this work? Why do these zones work? Why do they hold? And talk about the imbalance and all that stuff. So I think we're good for now.
Excellent. That's perfect.
Yeah. And it's after midnight where you are too. You have to get to bed and nurse that cough.
That's right. Yeah, what a blow. I was in Bali for 2 months. Took my family away. It was beautiful, and you got used to the lovely weather. We came home and felt sick as a dog the whole time. So it's a drag. You wouldn't believe it. He's wishing we would have more sunshine here, but the spring's arriving. I can see. You can hear the blackbirds singing. The sky's a little bit more blue. The sun's showing its face. What about Philadelphia? How's the
Beautiful. Beautiful. It was 80, 84, 85 degrees today. I went out for lunch to get a cheesesteak, and it's gorgeous out today. We're going to have a nice weekend, too.
Beautiful.
Past days have been rainy and chilly, but beautiful. It's going to be a nice weekend.
Yeah, nice, excellent. Hey, William, you're saying here, I looked at some of the charts today, 4 hour, and see some that work and some not. Not 80% though. You know what? There's a little trick that I'll show you next time that'll help you find the best areas. And it's once you see it, you'll think like, oh wow, why didn't I think of that? It's so simple, but it's monster powerful. And I'll share that with you. It's a really good way to find the areas that are going to hold. It's simply about looking when you look at a chart, asking yourself, where has price not been? You know, I'll discuss that now very quickly, just like for 2 minutes. So if you look at this, you see how price is here, and so we want to sell somewhere, assuming that we want to sell. So you have to look at this here, and you have to ask yourself, where has price not been? And you can see when price left this green candle here, you see all these wicks that go up like that. When the wick goes up like that, it tells us that price has been here. It's already been up here because when it poked up here, it cleared the road. So the liquidity has been cleared up to the green line. But if you look back one more, okay, now it's been there. You can see it like that. And you can see when you find a candle that has no wick on it or a tiny wick, that's a good sign. That's where you have thick liquidity, because above that, I mean, price couldn't poke high because it could only go down. And so right here is roughly the edge of the area that you want to be selling at. So from about here to about here. So you want to look for those wicks. I mean, if you spend enough time looking at a price chart, you'll just see all of these really, really incredible clues. And if we have a look here, you can see price is here. It's going up. It's strong. We want to buy it. Where do we want to buy? You could see that we had no wick here, but we had a big push here. And so you maybe want to be positioning yourself around here at the lows here, because price has already been back here. And so you could even from the low of this candle here until around here is probably somewhere where price is going to react, somewhere in here. Wow, that's a big stop. Oh, we're on the daily, we're on the euro and the Kiwi, that's why. Okay, yeah, so you can see it, but you'll learn to see this really quickly with some practice. You can see the wick went up here, and so where did price come back to? It came back to the wick, and these green candles, the high of the wick is typically the cheapest that you want to sell if it's supply. We had another one here. You don't want to be selling for a price any less than here. We had another one here. You see accumulation. You don't want to be selling for a price any less than the high of this candle. And here we have this one, but then it brings up to the next one. And you can see you keep looking left. You have all these wicks up here. So you're going to keep looking left until you find a price or a candle where you have a tiny or no wick, and we have that up here. You see here we had a lot of wicks up here. We have this gap that'll probably fill. This is inefficient price feed, and so price will typically close the gap and move back up into the thicker liquidity, which is going to be above the gap. Because the reason price gapped like that is because price was moving at a rate that orders could not be filled. There were no orders available at in this little black spot here. So price had the gap all the way down here to find the next level of orders. And so these are typically closed. But I'll go into detail with that. But it's just you have to focus on the wicks. Where has price not been back to? And then I think you'll definitely be on the safe side. You can see this one here. Our price came down here and we poked here. So price will probably react at around from here. So you could maybe enter here and your stop would be down here. And it's nice, we have some protection because we have these big bars, no wicks, so we have really thick liquidity here, really strong pushes. When you have big wicks to the upside and to the downside, this is erratic price, thin liquidity. You don't want to see that. You want to see bars like this, and like this, and like this. Again here, I mean the wicks, we have this candle here and the wicks are poking down here. And so you want to take the lows of the wicks, which is just here, which is exactly where price went to. Because this is showing you where price went. You can see child, parent. Here's the parent here. Anyway, I could talk about this stuff all night long, but I think I'll stop now. We'll save it for the next session.
We have those the two presentations coming up.
Yeah, you know what, Mike? I'm making a course with Vic Noble about trading, and I'm going to use that new material. So I'm going to amend my slides so I have this new material because I've updated the quality checklist and some other stuff. So now the information is refined and updated and a lot better.
All right, well that's okay. I mean, it's basically the same material. It's just presented differently. Yeah, that's fine. Yeah, that's okay.
Okay, cool.
Okay, that's good. That's good. I love having you teach. It saves me having to make my own presentations and me get up and do this. Having you do it.
Yeah, it's
I can be a spectator.
Yeah, that's right. It's good. I love it. I could speak about price all day long.
I know. I mean, I love having you participate here. I mean, they can hear this directly from you. And no, I'm just not all full of hot steam sometimes, you know? Like, what is Mike talking about? What is Mike talking about? Well,
yeah, it's.
Look, I'll talk to you about those dates because I have a few dates in mind. But I'll get to you on that, and we can schedule that.
Sounds perfect. Sounds really good. Well, I hope you guys have a pretty good insight into the indicator. Mike knows it pretty well, so he can certainly ask any questions if there's stuff that you want to know about what's going on inside the indicator, like how it's doing stuff. Feel free to let me know, and I'll gladly get back to you with some answers.
Good, and I'm going to play this recording for the New York class and the Miami class next week. So
cool.
I want to get the recording for them.
Yeah, cool, excellent. I'll send you a link when it's uploaded.
Good, good.
Excellent.
All right, and you guys have any last-minute questions for Sareed before it's 12:30 in Denmark, so.
That's right, bedtime. My little turkeys will have me up at the crack of dawn, I'm sure.
Of course. Yeah, Sareed's a great father, and I don't know how he does everything, but traveling and programming and work and FX Street and all this stuff. I don't know how you do it. I don't know how you do it.
Yeah, I don't know. Sometimes it's you got to find something you love, and then it's easy to do.
I suppose. All right. So I guess, guys, we'll give it a wrap.
Sounds good. Well, thanks everyone for being here. Thanks for your being here.
Thank you, guys. I'll talk to all you guys. If you want to email me or chat with me, feel free. I'm still in the office. Mario and I are both here. Thanks,
cool.
Sareed.
Hey, my pleasure. You guys take care. Have a super duper sunny weekend in Philadelphia.
All right. Thank you, Sareed.
All right. Cheers, guys. Thanks, everyone. Thanks, Jose. Thanks, Hayden. Thanks, Steve.